Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. Well, the much awaited US GDP numbers are out, and the quarter on quarter second estimate of the GDP growth rate came in at 3%. The previous number was around 1.40%. So, this was a positive surprise for the markets. Moreover, the US jobless claims also came in slightly lower. On the other side of the Atlantic, German inflation numbers were concerning, coming well below forecast and in some cases showing some sort of a deflationary trend. Good morning, JK. I think in our previous podcast also, you were one of the few people calling for a bottom in the dollar index, and it has risen since. How does these data points fit into your model?
Hey, good morning, Swaraj. Yes, actually, we are now back in inflation watch, and what we are seeing is key inflation numbers being published from major regions like Japan, Europe, and also US going forward tonight. And Japanese inflation came, again higher than expected, and core inflation was also, higher. So it along with the Japan actually upgrading the growth of the economy, yesterday's report saying we feel the Japanese are on the path to more modern normalization of their policy, because the Tokyo region inflation that came today is supposed to be a leading indicator of the nationwide inflation. So I think it's only the timing of Japanese next rate hike. Most people now expecting December to be the time when that will happen. Again, in European side, German flash inflation for August was again lower, 2% in August, coming lower than 2.3% that was expected. And even the July's number was much higher at 2.6%. On a harmonized CPI also dipped by 0.2%, basically minus 0.2% on a month-on-month basis, and that's quite a drop in their inflation. Of course, 5.1% drop in their energy costs, contributed to these drops. Now, Spanish inflation also came lower. Then we have the Eurozone inflation tonight, which is also expected to be lower. Now, this inflationary or rather disinflationary scenario in Eurozone, coupled with the slowing growth, as we have seen, the German Q2 growth has been shown to be contracting. So all this strengthens the case for September rate cut by ECB, perhaps one more in October. And the ECB is the closest to match the Fed rate cuts this year as per current market expectations. Then we have the core PCE inflation, the most watched number for the Fed as far as the inflation gauge is concerned today. And the indications are that the market estimates are that the core PCE year on year is likely to slightly inch up to 0.1%. And also the headline PCE number on month is expected to go up by 0.1%. Marginal increases, no doubt, but I think they are well within the comfort zone of the Fed, because we have seen Powell changing his language recently, saying that he has more confidence in inflation hitting the target of 2% on a sustainable basis. So the forecasts are met. I don't think it will cause any ripples in the market. Market will continue to expect a rate cut in September. Of course, now the majority do expect only a 0.25% cut in September, to be followed by at least two more cuts later in the year as we approach the November and December meeting. But apart from inflation, which is still on the radar, what cheered the markets yesterday was the GDP number from US that came above forecasts of 2.48% and well above last month's first estimate of 1.4%. The details show that consumer spending, that accounts for 70% of the US economic activity, rose at 2.9% annual rate, up from 2.3% earlier. And also a higher, business investment expanding at 7.5%, led by 10.8% in the investment in equipment. So that, again, reduces the fears of imminent recession in the US, which had risen after last month's non-farm payroll report. Markets cheered. You had the Dow hitting a new all-time high yesterday. Of course, S&P and Nasdaq were pulled down by slightly disappointing results from Nvidia. There was, negative close for the Nasdaq, no doubt. But overall, the GDP news is good, and perhaps inflation will also give more comfort to the markets. Jobless claims, as you said, also slightly lower at 231,000 now. All this, Eurozone inflation coming lower, and GDP doubling last month's estimate could not be ignored by the market. Hence, we saw the dollar index, rising by almost 1% from the lows, hitting 101.50, and then I think Euro was the biggest mover on the downside, falling by more than 1.25% from the top of 1.12%, 1.12. Even the GBP, which has been quite strong, has also slipped more on profit taking because it had one of the best performances during the year. Japanese yen holds 144, 145, range nervously, as the data from Japan supports more hikes, at least one more hike this year by the Bank of Japan. So Japanese yen is showing strength across currencies on the crosses. Yuan surprised by being the strongest currency yesterday, moving below 7.10. I believe it is more a case of a technical move, profit taking against the yuan crosses, which were quite weak. But I think we are in a region where the PBOC could well be supporting the dollar from further falling. On the rupee, we closed at 83.87, much lower than what we had seen the previous day, and backed by good flows. And as we have been saying, whenever there are good flows, that is when the RBI is probably allowing the rupee to appreciate. Closing at that 83.87 augurs well for a little more strength. Not much, not expecting it to move below 80, and definitely not below 83.75, where the PSU banks are expected to come back buying. Upside, of course, is well capped. The data this week, or rather today's data on US inflation and also next week's non-farm payroll, is likely to give much better direction for the dollar, and that can be an influence on the rupee as well. If we see either a sharp rebound in the dollar or even a further big slide in the dollar, all these, both of these can actually give some better direction to the rupee. Till then, we are on the range trading, waiting for the close. Thank you.
Thank you, JK. And it was and it is going to be a busy day for the inflation watchers when it comes to Japan, which printed its inflation slightly higher even on the core inflation front. So from the Japanese market, some sort of policy normalization can be expected, and a possible rate hike by the BOJ even in December. Now, as JK mentioned, German inflation was lower, Spanish inflation was lower, and tonight we have the EU inflation. So the disinflationary trend is evident in the EU region, and ECB is expected to support the markets by cutting rates in September and possibly even in October. The key event to watch out tonight would be the Eurozone inflation and, of course, the PCE from the US, which is also the Fed's preferred inflation gauge. It is expected to print slightly higher, but well within the band, so it shouldn't be a big surprise for the markets. On the currencies front, dollar index has risen almost 1% from the lows. Euro and sterling moved lower against the greenback due to profit taking and the fundamental reasons. For rupee, we closed at 83.87, strengthening slightly compared to the previous day, backed by some inflows. That's it from us today. Thanks for listening. Have a very good weekend, and see you all on Monday with a fresh round of market updates.